So functions of NBFCs. Okay, so it mobilizes resources, it converts saving into an investment, capital formations, provision of long-term credit, capital formation aids to increase capital stock of a company. Okay, provision of long-term credit and specialized credit. See, all this NBFCs provide long-term credit, and that's again the specialized credit, focusing on the the specific sectors. Aid in employment generation, help in development of financial markets, helps in attracting foreign grants, helps in breaking vicious circle of poverty by serving as government's instrument. Okay, I believe these are points we have discussed as part of financial system as well. Okay, so let's not waste time and let's see what is the difference between. Okay, difference between bank and NBFCs. So NBFC is a company first on the basis of meaning. An NBFC is a company that provides banking services to people without holding a bank license. See, any bank which has to be established in an Indian currency, Indian country, so it has to first get licensed from RBI under the Act of RBI and Banking Regulations Act. Yes, so but NBFC is not to establish an NBFC. It is not required, or getting license from the RBI is not mandatory here. Okay, let's the holding license from the RBI is not necessary, but somewhere RBI comes in terms of supervisory part for these NBFCs. Every financial institutions, every activities has to be monitored by RBI in India, but somewhere we see the license is not required, but supervisory function is being done by RBI here. Okay, moving back to bank as a government authorized financial intermediary that aims to at providing banking services to general public. Okay, see, NBFCs, what they do is they do give the financial assistance, but not getting the license from the RBI. Whereas bank, it gets the license from the RBI in order to perform the financial services. Okay, incorporated under on the basis of incorporations. See, NBFCs are the companies who are incorporated or who has to register under Companies Act 1956 or 2013. Okay, but whereas banks has to register or has to establish themselves by registering under Banking Regulation Act 1949. Yes, so this is a different. NBFCs have to register themselves as a company under Companies Act, and banks has to register themselves as banks under Banking Regulation Act 1949. Okay, so demand deposits. See, NBFCs are not accepted. Deposits you can refer to current accounts and savings accounts. Only NBFCs are permitted to accept term deposits, which are fixed deposits for a longer duration. So, whereas bank is not bank can accept demand deposits like savings account, current account, but whereas it is not accepted in NBFCs only can accept term deposits, which are fixed deposits for longer duration, but banks can accept all the three deposits, which is savings, current and fixed. Okay, moving ahead, there's a concept of foreign investment. So NBFCs are allowed, in terms of foreign investments, they can accept up to 100% in terms of foreign investments, but whereas it is not, it is only 74% for the private sector banks. Payment and settlement system, on the basis of payment and settlement system, so it is not part of an NBFC system. NBFCs are not involved in any kind of payment and settlement system, but whereas it is an integral part of banking system. So how an example is, we had discussed, as a secondary function, sorry, as a primary function under loans and advances, there is a function, there is a services given by banks referring bills of discounting. Okay, so here, so that where somewhere, I would like to repeat on bills of discounted bills. Okay, so here banks accept these bills and they discount on them, and they do they do payment on behalf of the borrower, and they settle the payment. So it is done in the banks, but it is not done in the NBFCs. Okay, so this is a integral part in terms of banking system, but whereas it is not in NBFCs. So any kind of settlements and payments is not being performed by NBFCs. It is, but whereas it is very crucial and important part of banking system, where they do have services in terms of payment and settlements. Okay, moving ahead, we have maintenance of reserve ratios. Okay, so whereas it is not mandatory in terms of NBFCs, and it is compulsory in banking system. So there is see there are certain ratios, or there are certain amount which bank has to keep in liquidity form, wherein so as we have a concept of keeping our savings accounts, current accounts, so we have to keep certain reserve ratios in terms of liquidity of amount, where our depositors can um, get that money whenever they are in need. So in bank, so it is mandatory to have the maintenance of all the reserve ratios in terms of maintaining the liquidity of finance or money. So it is quite important in banking system, but it is not required in NBFCs, because we don't have any system in terms of current accounts and savings accounts. So maintenance of reserve ratios is not required in NBFCs, and it is compulsion in bank, because the liquidity of money is important, because our depositors can access the amount whenever they are in need. Okay, so moving to the last point is deposit. Okay, deposit insurance facility. So wherein it is not available in NBFCs, whereas it is available in banks. So what this deposit insurance facilities is, see, when depositors, to secure the interest of deposits, or to provide the safety or security to the amount being deposited with the bank, the banks provide insurance facility for the deposits. So how it works is, if any circumstances where bank is unable to repay its own debt, and when they face it as bad debt, so at that time they prefer in terms of insurance facility in order to secure the deposits being deposited by their customers, or say depositors. So these are the major differences between banks and NBFC. Simple, you guys don't need to go for much in terms of like what does NBFC. So it is a simple, it is a company registered under Companies Act. Okay, okay. So that's what. And the bank is as a banking system which has to get licensed by RBI, and has to be incorporated under Banking Regulations Act. And these are the few differentiations where you can make out what how NBFCs functions and how banks